This is Matt Rosen, and this is the Grit Mindset with me, your host, Matt Rosen. The mission of the Grit Mindset is to inspire and empower our listeners by delving deep into the journeys of those who have faced significant challenges and emerged stronger. Through authentic conversations, we uncover the mindsets, strategies, and lessons that have propelled these individuals to overcome adversity and achieve success. My aim is to provide actionable insights and real-world advice to help our listeners cultivate their own grit and navigate their personal and professional lives with confidence and resilience. Hello, everyone. Welcome to this week's episode of the Grit Mindset. I'm your host, Matt Rosen. Here with me is a friend and mentor, Sunny Vanderbeck. He is the co-founder and managing partner of Satori Capital. Sunny, welcome on to the Grit Mindset.
Thanks for having me.
Yeah, it's great to have you here, man. Would love for you to share with the audience just a little bit about yourself and Satori, and then we'll kind of dig in from there.
Yeah, so I'll hit what I do now first, and then maybe we'll go on a little journey on how I got here.
Perfect.
So I'm co-founder and managing partner of Satori Capital. Our purpose is to create, fund, and inspire businesses that elevate humanity. Two main lines of business. One is to manage alternatives portfolios for CEOs that like to invest in things like that. And the other one is a private equity business. Private equity gets kind of a bad rap, often for a good reason. When I share a little about my background, you'll see we're trying to do something different. But at its essence, we're investing in companies that are 5 to 50 million of EBITDA, and we're trying to do three things differently. The first is what I'll call the operator's advantage. Most of my team, myself included, has been in the chair, has made payroll. And you all know what it's like. You've either made payroll or you haven't made payroll. And
once you don't want to do,
no, the world looks different when that's on your shoulders.
Yeah.
So that, actually understanding and having both empathy for and being able to engage in the day-to-day realities of building a business of significance, we've kind of been there. So we think we're different kinds of investors because of that. The second one is time horizon. So most of our industry has kind of a 5-year life on their capital. They deploy it and they're forced sellers. You look in their documents, they have to sell the asset. And that mindset can create some really short-term behavior in the boardroom. And so we basically figured out a way to be able to make these investments and hold them for as long as is appropriate. So it could be 99 years. It could be 9 months. We're just not attached to time. We think about it the same way you think about it with your business. I'm not a seller on any given day. I'm just running the business, but sometimes there's a better fit. And then the last is this idea around conscious capitalism. And the core thing in conscious capitalism is this. The best path to profit is to create value for your customers, create value for your employees, create value for your community. If you get that right, show me the company that has really happy customers, employees love to work there, all their suppliers love working with them, and investors are mad.
Yeah.
That's not a thing.
No.
So get those other things right. Quit trying to grind out the last nickel. Go figure out how to do something for your customer and you'll be more successful. So that, people thought we were aliens. When we brought this story to the market and we started this in 2008, we're yeah, we think you should care about employees and stuff like that. They just the industry just laughed at us.
Well,
they thought it was
also
dumb.
in the middle of the Great Recession as well, right? When you got started or right near.
I promise you that raising indefinite life capital in the middle of an economic meltdown is hard. It's really hard. People were like, no, I think I'm buying gold and ammo right now, not operating companies. So that was a little tough. So I spend most of my time on that part of the business, trying to help our portfolio companies be the best versions of themselves. Let me tell you how I got here.
Yeah, please. I know you didn't wake up one day and decide you were going to run a private equity fund.
Yeah, so my path to this is a bit unique. So I'll start way back in the day. So I started college at 16. I had the opportunity to do that. I didn't like high school. I was bored, and I wanted to go do something different. So I started college, an engineering degree. And it turns out college, it was no different. It was the same stuff, but just with bigger class sizes and less supervision. And, at 16, it's not like you can go do any of the fun college stuff.
Yeah, you can't get in a bar, you can't drink.
You don't get to do anything.
Drive.
And, the school I went to might have gotten in a little trouble around their, Greek life stuff. And so even there, there was just nothing. So, but I wanted to be stimulated by the experience, and I just kind of wasn't. So I decided to do the thing that was the most different from the engineering degree I was thinking of. And that was to get a contract to go be an Army Ranger. Look, it seemed a little silly at the time because I ate and drank like a college kid. I smoked a pack or two of Marlboro Reds a day. I ate a lot of pizza, drank a lot of beer, couldn't run a mile. And here I was like, hey, give me a shot at this.
Imagine basic training was a wake up.
I actually had a really good experience in that like I owe this guy a steak dinner for sure. And it actually speaks a little to the nature of the podcast. So imagine like the mindset, like I'm shooting for this, tippy point of the spear, kind of badass dude, and I can't run a mile. Like this is not a realistic thing. So I'm in, basic, and I'm kind of struggle busting. Like I'm making it, but I'm not finishing first on all the runs and doing all the stuff. But I was hanging in there. And I remember going to this drill sergeant, and I just was like, hey, I need to talk a little bit because I'm keeping up, but this path to being a black helicopter guy doesn't seem realistic. And this guy sat me down, and he didn't have a long conversation with me. He just looked over at me and said, well, it hadn't got you yet, has it? I said, well, no, drill sergeant, it hasn't. He goes, why don't you just keep going until you can't go and see what happens? And that was it.
Very simple, but
that was
brilliant.
That was the whole conversation. He was like, well, basically, don't quit. Just keep going. And if you can't do it, then fine, you can't do it. But until that moment arrives, keep going. Well, as you might imagine how the story goes, I just kept going. I was too stubborn to quit. So I made it through all the stuff and, ended up with a little black beret and doing the helicopter thing and running around in the dark. And it was awesome. An absolute blast.
Thank you for your service.
Thank you. And 4 years of that was plenty.
Yeah.
So I get out, I was 17 when I went in the military. So I get out at the ripe old age of 21, which is kind of wild. I went back to school for a little bit. I got a job at Microsoft, so I quit school again. Because I was like, well, this is what I'm in school to do, is to get a job like this. And I have the offer now. I can always go back. So I went to Microsoft for a little while. And in 96 had this crazy idea. There was this internet thing. I was like, these companies need a bunch of help. So let's go help them. We had no idea what we were doing. And there was 3 kids from Microsoft. We had no venture capital. We had credit cards and the ability to just deal with the suck for a long time. Eat ramen, started the business in the house. We had a moment in the early days. So 2 co-founders, Jason and Michelle, and we were in Texas. And about mid-July in Texas, Michelle disappears at lunch. And it apparently was a coup. Michelle went to Home Depot and bought an air conditioner because the house we were in didn't have an air conditioner on the bottom floor. And it was actually one of the most important moments in the history of that company. The name of the company was Data Return, by the way. I still remember it to this day because we had like 10 employees in the bottom floor of my house with no AC in the summer.
Wow.
It was kind of a drag, but we got this tiny little air conditioner and we would stand in front of it. Look, we had a good run at that business. We grew at 40% every quarter for 3.5 years, took it public on the NASDAQ. I was 27, I think, when we were public, so I stayed on as CEO. That's its own sort of chapter in a book. It's a pretty wild ride to kind of have that experience, and certainly at that age. One of the things I learned in that is I didn't really like spending my day with like analyst types as much as I like spending my day with like customers and employees and so forth. So we went to sell that business. It became the right time to sell the business. It needed to be part of a larger business. And one of our investors was a company called Compaq Computer. And everything was done. And when I say everything's done, like even with my experience now as an investment professional, like there was a single document we were waiting for. Supposed to show up on a Friday. And this will date me a little bit. It was supposed to show up on a fax because people didn't email PDFs at the time.
I remember those vaguely.
And I'm looking out my office door at the fax and sitting down. I'm trying not to freak out. I'm looking out. I'm sending myself test faxes. Maybe the machine's not working. And I'm trying not to get freaked out. We shared there was a board member of Compaq. And one of our board members was the same person. So a pretty close relationship along the way. I'm like, okay, don't freak out. Just be relaxed, be an adult, 27, 28 years old, trying to be a grown up. Nothing happened. Nothing came the whole day. Well, that next either Sunday evening or Monday, turns out Hewlett Packard and Compaq agreed to merge, and our deal was off.
Man, that's rough.
Oh, yeah, it was $1 billion deal too.
Wow.
That was kind of a drag.
Yeah.
But what do? You pick yourself up, dust yourself off, look at the situation and go, well, okay, now what are we going to do?
We just got to keep going, right?
Back to that drill sergeant's advice, like, well, it ain't got you yet. You just get up and keep moving. And that was about all you could do. So we ended up finding another deal with another strategic. We get into diligence. We're about halfway through diligence. And in the middle of diligence, 9/11 happens. Uh-oh. Because, 9/11 scale event is a good reason for any acquirer or investor to bring a full stop to everything that's happening and just say, we just need to wait a while.
And that happened to a big part of tech.
Yeah, let's just let all the dust settle. We didn't have the time for that. Just bluntly at this point, because we had been growing 40% quarter over quarter and we're built for that. We were doubling headcount every 120 days for 3.5 years.
That's amazing.
But when the growth went to 2% instead of 40%, we found ourselves with way too much expense. So we had a time problem at this point. Fortunately, the acquirer just kind of kept going, and we're like, well, we're not going to bring it up. If you're not going to bring it up, we're definitely not bringing it up. We got the deal closed in January of 2002. Within the next 12 months, our acquirer filed for Chapter 11. So I'll pause there, because this was a wild ride.
Yeah.
Like, we had lots of moments along the way where you're like, it's over. Well, okay, now what? Like, you get up and keep. I don't think anybody realizes how hard it is to be an entrepreneur.
I don't think they do. So, we're here to talk about grit. So now's a good time to ask, what does it mean to you?
I think the willingness to keep going in the face of unreasonable odds and ridiculous situations. Like that grit moment is when everyone else around you is absolutely terrified and thinks it's over, and you just keep going. And you just keep going. Like, every company has at least one moment in their history, if they're honest about it, where it was over. Something happened where lots of us have 3, 4, 5 of them, where you're like, if this doesn't happen, even, the backstories on like SpaceX and Tesla, they were days away from it's over. And they made it. We would run out of time if I told you the stack of, okay, well, I guess it's over, but we got to keep going stories along the way. So I got a lot of empathy for entrepreneurs, because you just have to live with that. And our spouses have to live with that too.
Yeah. So what did you tell yourself during those times to get through them? Because I'm sure you knew what was really going on. Maybe some of your executive team knew, but I imagine the rank and file, maybe they were somewhat aware. Obviously with 9/11, everyone knew it was a bad time, but what did you tell yourself and your team to inspire them and yourself to keep going through those times?
I was fortunate in the case of the internal motivation, because I had already done, quote unquote, the hardest thing I would ever do in my life. Mm-hmm. Like, so the washout rate in Ranger indoctrination, they've called something different now. The washout rate is 80% in 3 weeks.
Wow.
So you just watch people around you just dropping like flies. You're like, okay, I guess I'm still here. I'll just keep going. And you get to the end and you're like, okay, well, I did that. And by the way, one of the things nobody tells you, at least then, there was no internet, you had no way to know, is making it through that doesn't actually mean you made it. That means you now have the opportunity to prove yourself. So you do sort of multiple rounds of, oh, I think everything's fine now. And you can imagine 17, or maybe I had turned 18 and I got my little beret and I'm a Ranger and look how cool I am. And I get to 2nd Ranger Battalion up in Seattle. And I find out very quickly that for an indefinite amount of time, I'm going to be hazed every single day. And there's no end to it. You don't have any idea when it's going to end. So there's a whole nother round of people just saying, look, this isn't for me. Like, you're waking me up at 2:30 in the morning and making me run and jump in puddle, do all this ridiculousness.
How long was that process from starting basic to getting to being a ranger? A couple months, a year?
To get to the Ranger Battalion was probably 5-6 months. But to get through that first indeterminate amount of time was about a year. And what they're trying to do is they're trying to force the break. And what happens in the break is people either break down or break through. And you can watch it once it's happened. You can see it happen in other people. My guess is you've got some stories along the way in your life where you broke through because it didn't beat you. But this constant pressure every single day with no end in sight, you reach a point where you say, this is not for me and I'm not going to do this anymore. And you just go do regular Army stuff. Or you reach a point where you realize they can't get me. There's nothing you can do to me that's going to get me. And when you have that breakthrough, they stop messing with you because you can see it happen. I remember where I was when it happened, what the weather was like, the whole, everything about it. When I just realized there's nothing you can do to me. Yeah, okay, fine. I'll go do whatever silly thing you want me to do. So I was really fortunate internally that I had already had that process of everything's terrible, tomorrow's unknown, what are you going to do? Just get up and keep going.
Yeah.
So my own internal state was assess the situation, what's the next most important step? And I think this is an important distinction here. Like, as business leaders, we get a lot of push for think about sort of long-term and goals and objectives and strategy and all that kind of stuff. When it gets really hard, that stuff's all nonsense. It doesn't matter. The 3-year plan is an irrelevant thing when the world is melting down around you. All you can do is say, what is the next most important thing I can do? And go and do that. And when that's done, pick the next most important thing. So I took all of the energy around being scared, afraid, concerned, whatever vibe you want to put, and I put all that energy into motion. Like, one of the things I know about myself, I am not good at sitting and waiting. I'm just not good at that. It's not what I do. Let me be in motion towards the objective and I'm fine, even in the midst of ridiculousness. So for me, I'm not saying it wasn't hard. I just at least had the benefit of this wasn't the first time I got faced with a big bowl of nonsense. So I just went into motion, put my energy on how to keep customers taken care of, the employees taken care of, and so forth.
Got it. Well, it sounds like going through that Ranger training really prepared you for the uncertainty what you were going to face. Even though you went through it at a young age, you had a lot of experience with which to draw upon that helped you charge forward.
It really did. I think it helped with, you asked the secondary question of like, well, what do you do with the team? Mm-hmm. Like, do not gaslight your team about reality because they're not stupid. You hired these people. They're not stupid. Don't fill them full of bull and, sunshine and rainbows. Like, that's not a good choice. You've got to be able to acknowledge the situation, at least mostly. Now, the other end of that is like, you can't chicken little them. Oh my God, it's over. And when it gets really hard, people are going to start quickly looking to the leader for how should I feel? How should I behave? Like, they're looking for signals of, should I freak out? Should I? And so if they see you calm and focused on the mission and here's what we're going to do next, and like that sort of setting the pace and tone for everybody, I think helps a lot. But being willing to hear, and I actually learned this lesson the hard way. Like, you've got a team member that's coming to you with a concern, don't tell them it's going to be okay. That's not actually what they want to hear. Like, it was kind of a funny thing for me to learn. They don't want to hear the plan that we're going to navigate and why that's going to be okay. They want to hear that it's okay that they feel that way.
Yeah, just give them some empathy.
Yeah, some empathy. And, look, in Ranger land, like, empathy is not a core, like, that's just not part of the thing. So I had to learn that. So part of the engagement with the team is just like being honest. Like, yes, we're here. Yes, it's hard. Yes, it's scary. Here's what we're going to do.
Yeah. So you went through, Compaq gets bought by HP, 9/11 hits, you get bought by Strategic, they declare bankruptcy. What happens next?
I bought it back. Like the impossible. I got to do round 2.
Yeah.
And that was kind of a fun experience to sort of get it back. Because one of the things I learned, like, I'm not a very good business unit guy. I'm just more comfortable being CEO and having all the levers and knobs and dials. And when HR shows up and they're like, hey, we're from corporate and we're here to help, and we want to inform you of this numbskull policy about whatever, I'm not actually really good at responding constructively to those comments. So I was happy. It was like Liberation Day for me and for my team. Fortunately, most of my team stayed together through this. It was only a year. So when we got it back, we literally just took our old business cards back out of the drawer and got on with our day. So it was like the amount of energy we had when we got it back was just amazing and a lot of fun. And we had a private equity partner through that generation of the company. So we ran it for another 4 years. We built the first enterprise-ready cloud computing. Our customer base was sort of big companies with high security requirements, stuff like that. So cloud computing was something that they didn't know they wanted yet, but we were pretty sure we could actually make it work. And we did. Our CTO was an extraordinary human, and he actually figured out how to do this in 2005. That tells you how long ago this was.
No, it's really cool. I mean, for our listeners, you and your team somewhat pioneered the whole data center hosting, which then became cloud computing space. And I was in an application development firm. We put all our applications at data return. So I knew a lot of your team during that time.
Yeah.
So it was a cool story to watch from the sidelines.
Thank you. So it became time for another exit. I'd started to get the itch to do something different, which is what I do now. And even that M&A story, you have yet another moment where you're like, how can this be real? We were in between. So a lot of times these transactions, all the documents get signed on one day, but the deal actually closes 3 days later or 30 days later, depending on how big the transaction is. In this case, it was a sort of 3 day later close. There's a couple of check boxes you have to do, and then it closes. Well, in that intervening time, a nation state hacker broke into one of our customers' stuff. Now, we could advise our customers on how to secure their things. There was only so many things we could force them to do. It was one of those, we advised you to do the thing and you didn't do it, and now a nation state has infiltrated your systems. The company that was acquiring us also had a great security team. So I was like, hey guys, go ahead and reach out to our acquired security team. We need to just get on this. I was very focused on needs of the customer. What I didn't anticipate was that the acquirer would try to throw a pause in the whole deal because of this. Well, we don't know, concern, we want to do more research. They tried to stop basically and reassess. And it was an interesting moment because we kind of had to tell them, we have satisfied the conditions of closing per the contract. You will close now. Are you clear? And it was one of those moments oh boy, here we go. And fortunately, everybody was really clear that the conditions had been satisfied, and what was going to happen next was they were going to send a wire. So, but again, another a little smaller, scary moment. But the point is, there's a lot of them. What do? Do you freak out? Do you flip your desk over and go home and sulk? No, you look at the issue and you start working it. Just that's part of back to this grit thing. If you just work the issue, you're too busy working the issue to be scared, concerned, freaked out, depressed, whatever emotions you might have because you're busy working it. So along this, let me back up a couple of years. I had met a guy who was a customer of mine at Data Return. A guy, Randy Eisenman, was a CEO. And he and I got to chit-chatting. And this is the origin story of Satori. So we spent a couple of years business dating. We just liked each other. We didn't know what we were going to do. And we got to talking about, why are there no investors that are like us, that get us, that could help us, that there are kind of humans? We couldn't find them in the world. And so the genesis for Satori was actually 2 CEOs sitting at a Chili's on a Friday for years, eating this Southwest chicken. It's a funny thing, but every time, trying to figure out how to make the world a little bit closer to the world we wanted to live in. And out of that came, well, maybe instead of complaining about it, we'll go fix it. Well, that's the entrepreneur story. You see something that needs to be fixed in the world and you go fix it. So that was the genesis of Satori.
Got it. So you got through the sale of Data Return. The second time, company didn't go bankrupt, and you went off to start Satori. Is that how the rest of the story goes?
Yeah, that's right. Yeah. So we sold to a company called Terramark, another public company, who, by the way, they ended up selling all of Terramark to Verizon a couple years later. And we were off to the races, dead in the middle of the great financial crisis, trying to raise near permanent capital to invest in operating companies and help them grow. That journey was way harder than I expected it to be.
In what ways? What was maybe a challenging story? Or
I think one of them was the sort of stay true to your values story. So Randy and I were out trying to raise capital. We're flying all over the country, and as we mentioned earlier, like the world's melting down. Yeah. Like people were like, "Oh, the U.S. dollar is over, and people want to get paid in euros," and like it was big chaos. And there was, for whatever chaos there was in the economy, the chaos in the financial world was like 5 times that. Entire 100-year-old firms were disappearing overnight. And we get to, I think Randy and I were both in our mid-30s at the time, which is kind of young for the industry to be out on your own, running around saying, "Hey, give us capital to go do this thing for the first time." So we were awash in an ocean of maybe laters, and we don't understand your strategy, and why would you care about your customer? That's not important to making money. And like the negative Nelly, it was about as intense as it could have possibly been. And our strategy was, okay, we'll just keep going. Like, just keep going. And we just kept at it. And there was this one moment that stands out that was, I think, one of the defining moments. Like, what do you really care about? What do you stand for? What's important to you? So Randy and I were in this sort of top floor of some office building at this comically expensive, conference room with some old dead extinct trees made the cabinets and like that visual. And these guys were a placement agent. So their responsibility to raise capital for investment funds. Basically, they were giving us the pitch. Look, the world loves this operating background thing. It's the new hot thing in private equity. Like, we can raise all the capital you need to raise. You just have to shut up about this conscious capitalism thing. You can't ever talk about it again. And we'll raise you all the capital you want. And I looked at Randy, he looked at me, and we looked at this dude and both said, "No, thank you." And that, without any conversation between us, without any cogitation, stress, we just went, "No, we're not going to do that. We're actually trying to do something different in the world." Now, the consequences of that was it was going to take a long time. When we closed our first investment, we didn't actually have all the money until 2 days before the thing closed. But like, that's the entrepreneur story. Yeah. Like, I'm guessing you have sold something, and most of your listeners have sold something to a customer that doesn't exist.
Yeah, or have no idea how you're going to deliver it, but right. You'll figure it out.
Yeah, you just come back to the office, and I used to, in the early days of Data Return, one of the consistent conversations between me and Jason was I would come back and go, "Hey, Jason, you'll never guess what I sold today." He would be so mad, but he was so good. And 3 days later, he's like, "Hey, I figured out how to do that."
Yeah.
So there was a little bit of that entrepreneur, like, we're going to figure out a way to navigate this. And so the first 5 years of this business was really hard because our message was different. Like, that was the interesting thing. If we just sort of did it the way everybody else did it, it would have been easier. But it was so important to us to do this in a different way, where companies aren't baseball cards you're flipping or houses you're flipping. Like, these are living, breathing things. And we needed capital that actually understood what we were trying to build. So that was the early days, terribly difficult part of what we did. It's just keep going.
But you've been on the journey now 17 years. You've told me you have 12 companies in the portfolio, a great wealth management business. It sounds like it's turned out all right.
Yeah, it has. And we had the opportunity recently. Sometimes I don't know about other people, but sometimes I forget because I'm pretty focused on now and in the future. So every year we do a thing called the Gratitude Dinner. And we do it around Thanksgiving, and it sort of has a bit of the spirit of Thanksgiving, but we're pretty thoughtful about that word gratitude, just to be thankful for each other, or for, the good we're creating in the world, what we're doing with our portfolio companies, et cetera. And one of the teammates had decided to put together the entire journey over, I think it was a sort of 15-year mark, and had these big boards across the whole room with, all of our employees and their spouses and so forth. And it had all these major moments of history that, for me, I hadn't really spent a lot of time reflecting on. Like, wow, what a ride. And the funny thing is, I self-identify as, CEO and founder, but I've actually done this now longer. Data return was a 10-year journey. It was sort of 5 years was the first part, another 5 years for the second. I've actually done this now longer. So I'm deeply appreciative of how many people have joined us with the spirit of, hey, we're trying to do something different in the world. We're trying to be different people, with our investors, with our portfolio companies, with each other. And so that being able to, deliver over time and be consistent with our values, has let us grow to, pretty meaningful size at about $1.5 billion of capital now.
No, that's awesome. And you've even written a book about this, right? Your kind of way of thinking.
Yeah. So I never had hopes or dreams of being an author. People were always like, oh, you should write a book. You should write a book. I'm like, that really is not even on my list. It's not that it's low on my list. It's not on my list at all. But I started chatting with other CEOs, and what I realized was no one is talking to us about how values intersect with taking capital or selling a business. And so what happens is that everybody that's in the ecosystem around selling a business, and I'll use that interchangeably with taking an investor, it's kind of the same process. Mm-hmm. They care about what they care about. So the investment bankers, they care about getting paid. It's incidental that you're going to get capital. They care about getting paid, and they don't care what happens the day after it closes. The attorney's job is to manage risk, and they care about that and getting paid, and they don't care what happens the day after. And the accountant's job is to add stuff up and make nice charts, and they don't care what happens the day after. The only person that cares about the day after is the owner. But no one's talking about this. So we go into these processes, myself included, like the first round of this, how was I supposed to know? I didn't know. This is the first time. Most of us, the sale of a business will be the first and only time we've ever done it. We are woefully ill-prepared for that because everybody else in the room has a bunch of transaction advice. And so they sort of authoritatively speak about how this works and what to do and how to make decisions. And you just kind of go, you're like, okay, well, I guess that's how that works. This is some big senior managing director of whatever. They know how this works. And it often ends poorly. And you talk to these owners a year after the deal closed and they have regrets. And I realized if I don't do this, it's not going to get done. Mm-hmm. It's as simple as that. So I really want to do it? No, I didn't want to do it. So I wrote this book. It's called Selling Without Selling Out: How to Sell Your Business Without Selling Your Soul. And the book builds a process by which you can figure out who you care about, what you care about, and how to build that into a deal. And that was worth doing because no one has done it.
Oh, it's a great book.
And the payoff I remember giving a talk about the book, and at the end of the book talk, a lady came up to me and said, oh my God, I had no idea. I'm flying to New York right now to cancel a deal I was about to close. Wow. I am not selling my company to these people. I don't like them. I don't like who they are. I don't like what they stand for, and I will not do it. If I could just get one of those stories, it was worth it.
That's fantastic.
I have gotten quite a few along the way. It's been very meaningful to me to be able to share not just my own experience, but about 10 CEOs were involved in the book and their own stories about how they got it right and how they didn't get it right. So yeah, I guess I'm an author now. Yeah. That's cool.
Yeah, we'll throw a link to the book in the write-up. So we're running out of time here, but you have shared a great number of stories, wealth of experience. I'm glad to have you as a mentor. Would love for you to share any closing thoughts to those could-be entrepreneurs out there, people who are thinking about taking that first step, and just some kind of final lessons learned from all your experiences.
Yeah, I'll give you a couple of things. One, if you haven't done it yet, it is harder than you can imagine. It will take everything you have, and it will teach you that you have more, and it will take that too. And it's absolutely worth it. The second would be, when those hard moments come, figure out the next thing. Figure out the next most important action. Go do it. Stay in motion. Don't let it spin you out. Being in motion towards the outcome does solve the problem. You keep working the problem, and you'll get to the other side.
Yeah. That's awesome. Well, thank you so much for carving time out to come on the Grit Mindset. It was great having you on, hearing all the stories. It's an amazing story. For listeners out there, hopefully you can take something away, get a copy of Sunny's book. But we're going to go ahead and close out. This is Matt Rosen, host of the Grit Mindset. Stay gritty out there.